The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
The IRS can serve a John Doe summons on crypto prime dealer sFOX, a California court ruled on Monday, allowing the tax agency to hunt for potential tax evaders who are using the company's services. The IRS has previously served such summons on companies like Kraken and Circle, and typically does so when it wants to confirm whether the recipient's customers are properly reporting their taxes. Joining us now is Christopher Behnke. He's the head of operations at sFOX. Hello there, Christopher. So just to explain to the audience, a John Doe summons is a tool that the IRS uses with court approval to compel a third party like sFOX to hand over information on a taxpayer not identified by name in the summons. So tell us about the summons. What customer information records will you have to report to the IRS?
Absolutely. Hello, Christine. Thank you for having me on. So great question on that. So one important note to this that is worth noting that our head of legal would love for me to say is that, as noted by the DOJ, there's no allegations of any wrongdoing as by sFOX in our current investigation. With the John Doe summons, effectively, the IRS actually only served us the summons earlier this week on August 23rd. So we are currently internally reviewing the documents and evaluating the next steps with external counsel. Effectively, what they are looking for, as you stated, is the unknown tax identifiers within a different account. So this could be various things. We don't know the full stipulations that they are requesting, as we just did receive the summons, but are actively collaborating with the IRS to ensure that we provide all the pertinent details that they are requesting, while still, of course, respecting and protecting our clients' personal and private information.
So in a statement, the IRS commissioner said that the tool is used to catch tax cheats. Now, do you think that there are a lot of tax cheats out there? If so, what proportion? Or is this an overreach by the IRS?
That's a great question. It is difficult to speculate how many bad actors there may be out there. As we all know, the crypto tax landscape is very complex, and I believe the IRS is going about their aspects as they normally would to understand the operational aspects of any crypto firm and any sort of traditional finance firm for that matter, to understand that when there's entities investing, when there's different institutional players who are doing larger scale investments, it's critical to understand what that actually looks like for the investors on the back end of that. And the IRS obviously wants to ensure that everyone is following the rules of the industry and ensuring that they're staying in good practice.
All right. Well, the IRS has served a similar summons to Coinbase, which fought the order for a time. sFOX itself is not accused of violating any laws, but does sFOX hope to fight the order?
As I mentioned, sFOX, we're collaborating closely with the IRS on this to understand exactly what they are looking for. And similar to you mentioned with Coinbase sort of pushing back against certain requests from the IRS, we are not actively pushing back or intending to do so. However, we will ensure that we have absolute clarity on the specific requirements that the IRS is looking for. This won't be something to the effect of them saying, show us what you have effectively, and we'll give all of our client information. We'll be very diligent to work with them and ensure we provide exactly what is needed for the summons while also protecting our clients.
And I understand this was a decision by the California jurisdiction. So is that only impacting folks in California or beyond that? And how many people do you think that might include?
Great question. So that one is difficult to speculate, given that we are still reviewing the summons in its entirety. However, I imagine this would actually extend beyond California customers potentially. So we will ensure that we're looking with our outside counsel to address any of those items that are outside of California as well.
All right. Practically speaking, the IRS won't be making a lot of money this year in crypto revenue, will they?
It does look challenging for them. Obviously, the macroeconomic environment is tougher this year all around, I think, in crypto and in even traditional finance in the realm. So I'm sure they'll be looking for those areas that they can improve their revenue streams.